Hey traders, Raghee here. Welcome to Charts and Coffee for Friday, July 9. What a week it's been. Lots of roller coaster action as this market's been processing all sorts of information from the crude market, which if you've been following along over at the Simpler Trading YouTube channel, getting the free videos that we post for you all every night, also sent via email. We've been bullish crude. And yesterday really was that ring the dinner bell opportunity, although I was hoping for a little bit more downside. Isn't that a funny thing? Get comfortable with hoping for a little bit more downside when you are looking for those dips, right? So that was a very nice little dip on crude, and I'd love to see this thing upward, onward and upward, all right? So pretty interesting turn of events for a lot of markets. Dow continues to be choppy, so I don't make much of that move lower, and I don't make much of that move higher. But the two trending markets that I have been saying, look, if we sell off, buy the dip, and it's worked, clear since May, S&P and NASDAQ. Or another way of looking at this is when the two rows of the JT multi-trend representing the 8, 13, 21, and 34 EMAs, we separate them, right? We look at the way the 8, 13, 21 interact, and then we look and we add the 34 separately to get a good trend reading. When it is double green, when it is fully stacked, do not short the market. I think you'll make unnecessary donations to the market. All right, so let's get to it. That's where we sit today as we wind down the first full week of July. And do I have any thoughts on NEO? Hey there, James. Great to see you. Any thoughts on NEO? Well, you know what I'm going to say. Start with structure. It is a double green, so there's no questioning that we're looking long and frankly long only, right? So we've got that again, fully stacked, double green, 8, 13, 21 over 34. Expectations are for continued bullishness. Now, with NEO's tricky because it can be very volatile, but we are seeing a pullback here. These are two pretty large candles. I think if you want to treat this as an aggressive pullback, could we see an inside day on Monday? That would be my only thought, but it is buyable. It is buyable. There's no question about that. So thoughts on it? Well, it's not even my thoughts, right? What is the interpretation of the moving averages? Bullish. We have predominantly green grab candles with some neutral blue candles factoring in. That's still pretty bullish. 55 exponential propulsion. Support, bullish. We've got the beginning of what could be that Darvis pattern that precedes the box. Support. And then look at the last Darvis right here. If we were to extend this out, you're in the support zone of the previous Darvis. So yeah, there's a lot to like in this area, James. Sure, for sure. All right, next up is CLF. So there's two names within the SLX that make a lot of sense. I actually don't have a problem with SLX because what do we have here? This is a choppy market, right? How do I know that? Bearish, take a look. Bearish sentiment, neutral trend. Half stack, not a double green, but not too bad. In this environment, yellow trend, this is essentially oversold. So if SLX is at a support level, then relative outperformers like CLF, which isn't great, but it's buyable. All we need is one good Wall Street bets. Let them get all yah-yah about this thing again. And That would help. It probably doesn't need it, although it's really nice, clearly, when it does happen. But this is buyable. It's second only to a VALE. So if you ask me, Rog, CLF versus VALE, I'd have to lean a little bit more towards VALE. But I'd say they're both, number one, look at the cost of these. These are both very reasonably priced stocks. They're both very reasonably priced options. And, keep this in mind. When I'm setting up an options trade, like I would on CLF and VALE, when you have an inexpensive stock under, say, 120, under 100, under $50, there is an opportunity to buy the underlying stock. So I want you guys to know this, because I think a lot of folks do ask me from time to time, Rod, can we buy the stock? We had a setup in Rig not too long ago. And someone asked me, Rod, can we buy the underlying stock? $3.80, $4.20 stock? Of course, because I would not even think about a call in this particular stock unless there was a valid buy in the underlying. So if you're thinking to yourself, Rod, gosh, I wouldn't mind buying the stock from time to time. Is the setup, are the tools you're walking me through here valid for that? Of course. In fact, I'll go so far as to say, if I don't like the structure of the underlying ETF, futures, stock, I have no business buying a derivative of that, right? I have no business buying the option on that. So yes, like it. Keep an eye on that VALE and keep an eye on that SLX ETF. And that's where we should really see everything start to gel and hopefully move together. All right. So next up, and thanks for the question there. All right. We've got CVX. Hey there, Jose. All right. You know what my problem is going to be with CVX, right? So of all the OIH and the stocks within the OIH, XLE, the stocks within the XLE, and XOP, I guess my first question, and the question that must precede all other questions, I will go so far as to say your watch list is more important than your strategy. Directional. Let's assume you're not fighting the trend, right? Let's say you're not out there trying to fight the uptrend in the S&P or fight the uptrend in the NASDAQ, right? Don't do that, please. But as long as you're not trying to fight the trend and you're making the trend a priority, your watch list is even more important than your strategy. So I spend an inordinate amount of time in the sector secrets room or the futures room talking about relative outperformance and making sure that what you trade takes precedence over how you trade it. It's easy to let strategy take the driver's seat when in fact it should be your watch list. So I don't have a problem with CVX or the focus on oil. We're long oil was something we did in sector secrets yesterday. My issue is this the best, Jose? So yes, Jose, thank you for asking the question. And I'm going to ask you a question back, my friend. Is this the best example of bullishness, of a quality uptrend, of structure that you can find? Start there. And then whatever you wanted to do to CVX, buy it, sell it, put credit spread, whatever, it will likely work better. And then I would also say, don't underestimate in some situations the tide, OIH, XOP, XLE. I like XOP the best. But right now, Jose, I'm still at the commodity level. So when we talk about CVX, we're really talking about an oil stock and the group of oil stocks, which we know, right? That's obvious. Until I've got a good read and typically a position in oil, in RBOB gasoline, I really want to make sure that I've got the commodity set up in place and I've got clarity there before I look at the next, the dominoes falling, if you will, the next one, which would be oil stocks. Same thing goes with steel or gold and miners. Let the commodity go first. And so I'm still at sort of the commodity level with the USO. We've got a long position in USO. And I didn't love a lot of the oil stock structure. I love the structure of UGA. I love the structure of USO. And by the way, let's go back to, can you buy the stock on these things? UGA is a $35 stock, right? If you're looking at the underlying. USO, it's a $48.50 stock, if you like the underlying. So, options, futures, stock, ETF, I don't think we have different setups when we're trading them. They really should mesh. And you'll find when they do, really good trades will typically be on the other side of that. Visa. They're like Visa. Actually, it's just now clarified into the 8/13/21/34. And notice again, I separate those four moving averages. 8/13/21 on top, 34 on the bottom. And so, yes, we now have that fully stacked, full stack. Every time I say full stack, I think of pancakes, and then I get a little hungry. Half stacks, careful. They're usually neutral, and you're really going to have to be patient about when they're going to erupt out of that range. But this is buyable on a pullback, and buyable on a pullback, yes. Kyle asks, more importantly, what am I drinking today? So today we're rocking Java Press, who are the people that I buy my manual grinder from. I don't like those whirring food processory high-speed coffee grinders. I like kicking it old school. So I buy my grinders from a place called Java Press, and they actually have some really nice coffee there. And today, I'm doing the extra mile, which is a little bit light. It's Friday. Don't need to be too amped up. It's a lighter coffee. So there you go, Kyle. Rocking a light, extra mile coffee today from the good folks at Java Press. All right, thoughts on Microsoft. So Microsoft's looking pretty darn good because XLK and Apple, they're all marching together. Tech has been clearly what has been favored. This is a really good opportunity to mention that I don't say this lightly, and I don't say this to be silly. This will change your trading life. Absolutely. And this is actually an indicator that I make free to members. The JT Multi. Take a look. This is where the trade was brewing, right in there. Now, we're surfing the 8 exponential. This is big wave surfing. When a market goes parabolic, when the distance from the wave to current price is not only 1.5 times the daily price movement range, that's a historical volatility measurement, but it continues to widen, that's big wave surfing. I'm not going to go Laird Hamilton it up in this area. But what I will say is if you're paying attention to the way the markets are moving and you're paying attention to the structure, when we go yellow like this, you're still going to keep in your mind a bullish directional bias. That is the higher probability side of the way that markets transition from trend to chop. So I like the long. I just don't like it up here. It's a very, very shallow pullback. But I do overall like, I'd rather be long. I've been basically imploring everybody, please don't short the S&P and the NASDAQ. Please don't short tech. If you're looking for fades, it's the Dow, it's transports, it's financials. Those have been laggy. Yesterday, somebody asked me, do transports actually tell me where the markets are going to go? No, it's indicative in some way of where the Dow could go, but not as indicative as it once was, because it's just a basic understanding of what's weighted within the Dow. As much as I love my Dow theory, as you all know, transports aren't as impactful to the Dow as they once were, because the weighting of industrials is not the number one weighting within the Dow industrials. It's actually tech and it's financials. So be careful, assuming that the rollover in the IYT is sort of inevitably the rollover in the Dow, and that any of that has anything to do with what's happening in the NASDAQ, right? So keep that in mind in terms of the structure that we look at through the moving averages, the structure that we measure through the grab candles. and separating the different indices and what they're weighted by. So, for example, the S&P could be a lot stronger, but it's been XLF in many ways holding it back. And the Dow is not necessarily weighted in a similar way to the NASDAQ and the S&P. So that's sort of the secret to sector secret, looking at the markets from the sector level, looking at how their composition is different at the sector level, and understanding what the sectors are doing that are influencing the broader index. So thank you for the question on Microsoft. I like the structure. I like the structure of XLK as well. I like the structure on the NASDAQ as well. Ultimately, as much as I want to be long, can't be long from where we are right now. So thank you for the question. TMUS. Hey there, Nikolai. We've been talking about TMUS in the Sector Secrets room for a while. Pullback. Is it going to go to new highs? I'd like to see it pull back first. I'd like to see just a little bit lower low, maybe 21 exponential as it did back on the 30th and the 1st of July. But yeah, generally speaking, a pullback buy is exactly what I'll be looking for. And I want to mention something. You know, it's an easy trap to fall into. Momentum trading is very easy to fall in love with, because it's going to tell you you've got a whole lot more opportunity than the buy the dip crowd. The buy the dip crowd will have very small windows. I'm the buy the dip crowd. I'm an exhaustion trader. So momentum will say, well, here's a new high and here's a new high and here's momentum. Look how many more times a momentum type mentality, momentum type mindset is going to give you more opportunities. I think that's why people fall in love with momentum. It just gives them more to do. It somehow rings their dinner bell more often. I don't believe necessarily that is the way that you want to look at the market. You want to look at the market on days that, for the most part, within the context of an overall uptrend, folks don't want the name. I want this name for a brief moment in time to be sort of underappreciated, because within the context of an uptrend, this ignored, underappreciated little move is where you're going to find your edge. Edges, actually, think about people say, well, how do you find your edge? Edges aren't wide. Edges are what? They're narrow, razor's edge. Just the implication of find your edge does sort of, suggest that edges are very finite and they're small. We're not going to have opportunities every day, and I think momentum trading sort of somehow scratches that itch, right? But then what are you doing? Your edge is pretty dull at that point. If you can have a trade 3-4 days in a row, I don't find that an edge. Edges are quite literally, to me, that razor's edge, that very specific opportunity, that very specific price. There's no right or wrong here. Just so you know, there's nothing I can do up here. Very little. At least we're pulling back some based on this candle we see. But let's see how the 9th behaves. Let's see how today's market opens and what kind of price action we've got. But I would need a pullback, my friend. Yeah. MA. Yellow market, overbought, oversold, key up a slow stochastic, key up your ready, aim, fire. Take a look at pullbacks on your V-score. I'm not going to prioritize yellow markets in this environment. So I would even call this, accumulation. You're not wrong, but I think accumulation really should have more blue, my friend. I love that you're thinking in the sideways market, right? I love that. But accumulation should be a little bit more narrow. Accumulation should be a little bit more dominated by the blue grab candles. This to me is more chop. It's more chop. And once I've got a certain daily price movement range in place, that's really for me the measuring stick between a narrow range and a more wide range. And that's the difference between accumulation and distribution. Okay. So I would say this is more chop. Regardless though, accumulation or distribution, respect the trend that was and focus on the lower end of the range. And that's what's great. You're going to be looking at a very similar setup, even if you sort of misidentify the sideways market behavior. And again, it's not a matter of, it's not even a matter of right or wrong. It's, what is wide enough for distribution or what is narrow enough for accumulation. All right. Is this market brutal? Andrew, my friend, I hear you. I totally hear you. But I can't say that it is. This is normal. These are normal markets. The the difference between this year and last are the number of trends. And the difference between this year and last, it's just going to force you. It's going to force you to be patient. It's going to force you to really find those double green, fully stacked EMA markets. And so I totally hear you, but I think we have a fix. And the discussions we have in Charts and Coffee, try, looking at the market through that paradigm. Try looking at the market through, okay, Rog's saying, let me focus on these uptrending markets. Let me focus on markets, far fewer markets that are still in that nice structure heading higher, which is more reminiscent of what you saw in 2020. There are little glimpses of 2020 in 2021, but they're in very, very small, sadly, ever receding pools. Right now, tech is looking good. Healthcare is looking really good. Energy is waking back up again via crude oil. So there are TLT, the 30-year bond, another long position we have in sector secrets is good. But I will say I'm less active. So to that point, right now, we have fewer open trades than we've had, say, 6 weeks ago. But it's really more the market gauging our level of activity based on the number of names that can qualify to be on the watch list, and then the actual triggers, which for me, razor's edge. And I don't get extra compensation from the markets for being active. I just get paid for being right. And if right now I trade less frequently, I know it's going to be a little bit less in terms of just the accumulation of profits in an account, but I have to let the market dictate my pace. So I hear you on that in terms of, it's been much more a selective market. Yeah. XLF and XLE, I think they're both probably sold, getting close to oversold levels, Michael, but I'm not ready yet. Find some relative outperformers within those ETFs, get down to the individual stock level. And I think you'll be in good shape. Do I buy on double green? Double green is the environment. Double green is the environment that validates the long. If I want to start selling, double red. Trend following the dominant psychology of the market. And it's going to create sort of a governor on your trading. It's going to dictate where you can trade, how you will trade it, which direction you will trade it, right? It's going to dictate a lot. And I think the toughest thing about being a trend follower, and there's a lot of books dedicated to trend following, and we know that this is a classic way to tackle the markets. The turtles are famous for it. There's podcasts dedicated to it. There are hedge fund managers that are buying sports teams where their funds are trend following funds. So there is value in that trend. But I think when you're a trend follower, you've got to identify the trend and be patient enough to wait for that specific pitch where we have an ideal or even acceptable balance of risk and reward. All right, so I've run over a little bit here today, but thank you for the questions. Thank you. None of my indicators are specific to a market. So for those of you that are futures traders saying, Rog, when you flip over from YM to Apple, I don't see you changing indicators. Same indicators, gang. I'm going to look at the same indicators, day trading my crude oil futures as I would end of day trading crude, as I would trade, say, the XLE ETF or the Exxon stock. Same set of indicators. 4 factors: price, volume, volatility, time. All right, gang. Have a great Friday. I'm looking forward to seeing what this market's going to give us today. We have some great positions in sort of some boring markets, meaning pullbacks in bonds, pullbacks in crude. And I'm looking forward to next week. Let's get through this shortened holiday affected week. And let's see if our buy the dippers can take the market higher going into the weekend. I'm very bullish this market, gang, when I look specifically at the S&P, the NASDAQ, and the sectors, most of the sectors that are heavily weighted within it. Have a great one. Happy Friday, everybody. I will see you all in the futures room for the close. I'm going to hop into the sector room and hop into the chat here. Be good to each other. I'll see you Monday.